In today's show, I'll be sharing the latest Bitcoin technical analysis as we are pumping back in the green. Also, breaking news from Peter Schiff saying, I don't think Bitcoin has any real value at all. We'll also be discussing Bitcoin mining difficulty sets yet a new high pre-halving. Let's freaking go. As well as 90% of the Bitcoin ETF inflows are still retail, according to the VanEck CEO. Also, Uniswap price tanks 10% as the team vows to fight the recent SEC threat, including the Wells notice, which is typically before a lawsuit. We'll also be discussing Bitcoin to 250,000 per coin this year in 2024, according to the billionaire venture capitalist Tim Draper. Also, Bitcoin bulls unite. Cathie Wood's 2.3 million forecast gains support from none other than rich dad, Robert Kiyosaki. I'll be breaking that down for you. We'll also be taking a look at the overall crypto market. All this, plus much more bullishness here in today's show. But anyways, fam, if you're new to the channel, very important to smash the subscribe button to receive daily premium crypto news alerts every day, just like this. Also, equally important to smash that thumbs up button, because when you like the video, it helps out tremendously with the YouTube algorithm, helps get more eyeballs on the channel, and it's always greatly appreciated. Today is pod episode number 1606. I'm your host, JV, and it's April 11th, 2024. The market is a-pumping. As we can see here on Coin360, Bitcoin trading back above $70,600, back in the green. We also have TON up 8%, while Ethereum's pulling back, and Solana and Cardano are pumping and in the green. And checking out coinmarketcap.com, the current crypto market cap sits at $2.61 trillion with roughly 84 billion in volume for the past 24 hours. We got the Bitcoin dominance on the climb at 53%, Ether dominance on the decline at 16.1%. My question for y'all in the chat, how high do you feel this Bitcoin dominance is likely to climb for this cycle? Do you think we tap 60, 70, potentially 80%? Love to know your thoughts. And checking out the top 100 crypto gainers for the past 24 hours, we got Tau leading the pack, up 12.5%, followed by Neo, the one, trading, or I should say, up almost 10% of the day, as well as Toncoin up 8%. Below that, Jasmy, Pepe, EOS, VET, and BGB. Now, which altcoins, if any, are you guys most bullish on for this particular bull run? Holla. And checking out the crypto bubbles to get a visual perspective on the day. We have, safe to say, I'd say 70% of the alts are correcting in the red, but we do got a handful of gainers. And zooming out on the monthly, very similar. I'd say maybe 60% in the red, 40% in the green, with some respectable gainers. Core 200%, Pendle 131%, Ton 100%, and Whiff 85%. And checking out the Crypto Greed and Fear Index, we're rated a 76 on the day. Extreme Greed, yesterday 78, last week a 70, and last month an 81 in Extreme Greed. We keep an eye on this because the higher this number goes, the more likely of a correction. But anyways, checking out the Bitcoin halving countdown. All eyes on Bitcoin halving 2024, roughly 8 days, 8 hours away, with the estimated halving date scheduled for April 20th. Can you say 420 at 458 UTC? But just note, this is all dependent upon the block height, and it's exactly when we hit 840,000 we're going to see a halving. So this recalibrates virtually every moment, and the current block we're on is 838,786 as displayed here on the time chain calendar. And currently you can trade $1 for 1,419 Satoshis, and we got the Bitcoin market cap sitting at 1.39 trillion. Let's go. But there you have it, fam. Let me know where you feel the Bitcoin price action is likely to take us leading into the halving in approximately 1 week. Yo. But anyways, fam, keep the comments a-flowing. Always appreciated. But let's dive into today's Bitcoin TA. Check out some of the charts of where the price action is likely to take us next. Here, we're looking at the 1 hour chart. Bitcoin refused to give up 70 G's support into the April 11th Wall Street Open as fresh U.S. macro data boosted the mood. Data from TradingView showed seesawing Bitcoin price action, with the bulls holding gains from the day prior. The March print of the PPI delivered a boost to risk asset sentiment, coming in below expectations at 0.2%. month on month. This served to partially counteract the previous CPI overshoot, ultimately providing a mixed picture of inflationary forces. And overall, markets were expecting to wait longer than previously thought for the Federal Reserve to lower their interest rates. Now, after yesterday's hot inflation data, I'm honestly not sure how much today's reports matter. Markets are baking in higher for longer, according to Keith Allen from Material Indicators. Allen, as well as others, focus on the upcoming block subsidy halving and current Bitcoin price structures as more important focuses moving forward. Quoting him here, the bullish case for Bitcoin is building around a series of higher lows. The bearish case is centered around the fact that the bulls haven't been able to validate the RS flip at the trend line, 69 or the 21-day moving average. Allen added that 69,000 remained the most critical level to watch. Now, an accompanying video included a chart of Bitcoin's order book liquidity on the largest global exchange, Binance. This showed sellers in weight near 73,000, along with strengthening bid support near 67 Gs. Now, market observers, meanwhile, drew optimism from the landscape on the exchanges, with funding rates staying low despite the recent upside price. Now, quoting Look into Bitcoin founder Philip Swift, Bitcoin funding rates finally look healthy for the first time since Bitcoin climbed above 70,000. Bitcoin needed this choppy consolidation to clear out the degens trying to go leverage long, encouraging sign for the bulls. And Dan Crypto Trade suggested that the traders were now hesitant to long Bitcoin due to successive rejections near the all-time highs. Quoting him here, 71,500, important to break and hold above. Then those all-time highs should only be a matter of time. Let me know if you agree or disagree with this market analysis. And now, this was a video. Peter Schiff was the guest on the Valuetainment Pod with Patrick Bet David. And Peter Schiff basically bashed Bitcoin for 13 minutes. Very interesting. I encourage you to check it out. It got a lot of love here on X when I posted it last night at 10:56 p.m. Already got 500 hearts, 80 retweets, 139 bookmarks. But here are some of the quotes from Peter Schiff. I don't think Bitcoin has any real value at all. I think it is just a speculative mania. Ultimately, I think MicroStrategy goes bankrupt. I think eventually Bitcoin is going to crash, and the creditors are going to end up with the company. Now, it's interesting, and the reason he talks about MicroStrategy, he was pretty much asked about, how he truly feels about all this. And another thing, Patrick Bet David asked him, which I found interesting. He said, "So what's your portfolio look like, Peter? What are you holding?" And he said, "More than 50% of my portfolio is gold stocks." Now, I find that interesting. That means more than half of his portfolio, he doesn't even hold the precious metal in which he goes around the world pumping, right? While he bashes Bitcoin, he actually has gold stocks. And he didn't answer and finish the rest of his portfolio. He just said, more than 50% of my portfolio is gold stocks, meaning less than 50% of your portfolio is actually gold. But when he started off the pod here, Patrick Bet David, he had some $500,000 like baseball cards like Babe Ruth. And then he had, a bar of gold. And then he said, what would you prefer? The gold, $1 million in gold, the baseball cards, or Bitcoin? And Peter Schiff ultimately said, well, I take everything over Bitcoin because Bitcoin has no value. And he went on with his rant. But let me know your thoughts on that. And let me know if you got a chance to watch this episode of the pod. It's a 13-minute vid on here that I shared on X. Holla at your boy and let me know. And now let's make fun of Peter Schiff here in the comments, shall we? But anyways, fam, let's dive into our next story of the day. Let's discuss the latest with this Bitcoin mining difficulty setting a new high. Pre-halving, another great sign. Bitcoin mining difficulty experienced another adjustment for the Bitcoin halving, hitting a new all-time high of 86.4 trillion, according to data from BTC.com. The latest adjustment occurred April 10th, which was yesterday, increasing the Bitcoin mining difficulty by 3.4% from the previous difficulty level of 83 trillion, which was set on March 28th. The difficulty of mining Bitcoin continues to grow ahead of the historic halving event, which is poised to cut miner rewards by 50%. The latest Bitcoin mining difficulty adjustment is likely the last one before the halving. Now, according to BTC.com, the next Bitcoin mining difficulty adjustment will occur in 13 days, which is April 24th, which will be roughly 4 to 5 days after the halving. So in the meantime, the Bitcoin halving expected to occur in roughly 7 or 8 days, maybe the 19th, maybe the 20th. I just hope it's 420, just for the sake of saying, hey, we had a halving on 420. That'd be pretty lit. Pun intended. Bitcoin mining difficulty measures how hard and time-consuming it is to mine a new block or solve mathematical puzzles. Under Bitcoin's proof of work consensus, Bitcoin mining difficulty adjustment occurs every 2016 blocks, or approximately every 2 weeks, as Bitcoin is programmed to self-adjust the difficulty level to maintain a target block time of 10 minutes. The mining difficulty directly depends upon the Bitcoin blockchain hash rate, a unit measuring miners' computational power to produce new BTC. Now, in line with the increasing Bitcoin mining difficulty, the Bitcoin hash rate has seen a significant rise recently, surging from around 619 exahashes per second on March 28th to 696 exahashes per second April 10th. And according to data from BitInfo charts, the hash rate of Bitcoin reached an all-time high of 727.9 exahashes per second on March 24th. Some analysts predict that the Bitcoin hash rate will likely drop after the upcoming halving event 2024. And according to Galaxy mining analysts, as much as 20% of the Bitcoin current hash rate could go offline after the Bitcoin halving, as many miners will likely turn off their mining rigs due to the lowered efficiency. Now, the analyst said that more than 70% of the Bitcoin hash rate was churned out by 8 ASIC miner models by the end of 2023. So there you have it. I think just another massively bullish factor in the ecosystem when we get new, adjustments for the mining difficulty and the hash rate keeps breaking out, reaching new all-time highs. It's just a sign of the time. Bitcoin price tends to follow the hash rate. It's a lagging indicator. Anyways, fam, keep the comments flowing. Let's dive into our next story of the day. Keep an eye on Nipsey, by the way. Let's discuss the ETF inflows. Headline reads, 90% of the Bitcoin ETF inflows are still retail, according to the VanEck CEO. Does that mean the institutional FOMO hasn't even began? What? Anyways, Bitcoin ETFs have attracted significant amounts of capital in 2024, but traditional banks and institutional investments have yet to enter the fray. Speaking exclusively to Cointelegraph at the Paris Blockchain Week, VanEck CEO Jan VanEck said the retail sector has primarily been responsible for the inflows into the spot ETFs in the US. VanEck said that the initial success of the ETFs, which have on some days seen billions of dollars worth of inflows since their launch, which the official launch, ironic enough, was exactly 3 months ago on January 11th. Today is April 11th. Now, they said it surpassed his expectations. He believes the inflows have not come from significant investments from traditional TradeFi players. That's right, quoting him here. I was surprised, but I don't think it's traditional investors yet. I still think 90% of the flows are retail. You've had some Bitcoin whales and some other institutions move some assets in, but they were already exposed to Bitcoin. And here's a photo of him speaking at the Paris Blockchain Week, sharing that. The CEO of the investment management firm added that no U.S. banks have officially approved or allowed their financial advisors to recommend Bitcoin to date. VanEck said that the next month could see the arrival of some major institutional investments from the banks and traditional firms, but that the Bitcoin ETF landscape was still in its infancy. That's right, quoting him here. There's a lot of maturation to happen. A lot of technology will be developed on chain, so there is a long way to go. And also, he was asked why investors would prefer to invest in a Bitcoin ETF over directly buying and managing the Bitcoin themselves, for example, self-custody. VanEck said convenience was a major reason, as investors look to fund managers to handle their entire portfolios. Quoting him again, convenience, safety, and affordability. You had 2% spreads on many centralized exchange platforms like Coinbase. We have single-digit spreads for the ETFs and no fees or low fees. It is easier just to do a buy ticket than anything else. Now, I disagree. I think the easiest, most convenient, safe, and affordable way to do it is self-custody for obvious reasons, but you also need to learn the basics of securing your wallets with self-custody. But it is very simple. In my opinion, a 9-year-old can do it very successfully, right? So it means any age can do the same thing, but some people just trust others to hold the Bitcoin for them. But there's also downside. There's risk associated with them holding your biddies. Number one, not your keys, not your coins. If you don't hold the Bitcoin and control the private key, you don't really own the Bitcoin. And yes, it can be confiscated. All Bitcoin ETF BTC can be confiscated. So something to keep in mind. Now, VanEck was founded in 1955 by John VanEck, who would make his name by starting the first gold fund in the US. Interesting. In 1968, when gold was fixed against the dollar, VanEck said his father's fund boomed as inflation soared in the 1970s. VanEck said his tendency to be a paranoid business person, maybe he smokes the reefer, has kept him alert to any emergent assets that could contend with gold. Quoting him again, in 2017, we said Bitcoin will not replace gold, but it will significantly complement in people's portfolios. VanEck said his firm's big picture approach is investing driven by understanding that political, economic, and technological trends will drive financial markets. Up until the 2010s, there's not been a lot of emergent asset until Bitcoin rose to prominence. Now, quoting him here, I started looking at Bitcoin. I am not the super in love with it or anything. I just think that at times you really want to have a store value in your portfolio, and that's what I care about, people's investment savings. The CEO added that there's an argument for Bitcoin being a better store value than gold in contemporary times. He also said that the U.S. has a big budget deficit problem and that it must tackle in the coming years, and that the market movements are reflecting anticipation of this reality. And while much has been made of the impact of the Bitcoin ETFs, the price appreciation of Bitcoin in 2024, VanEck said their impact might be overstated. Quoting him here, what I'd like to point out is that it is not the most earth-shattering thing. The Bitcoin market is more global and much deeper than just being influenced by the ETFs. Now, VanEck pointed to a sharp rise of the price in early April that did not occur during the U.S. trading hours, which is indicative of the influence of Asian markets. So there you have it. Let me know your thoughts on that, whatever feedback you may have. Let's discuss the latest with Uniswap versus the SEC. The SEC won't let me be, or let CZ be free. But anyways, Uniswap price tanks 10% as team vows to fight the SEC threat. Uniswap, the token for the decentralized exchange of the same name, sunk to a 6-week low after Uniswap said it received a proposed lawsuit notice from the U.S. regulators, which it is ready to fight. Let's go. Uni dropped 10% from $11.21 to $10 an hour after Uni said it received a Wells notice from the SEC, a notification that the regulator is planning enforcement action. Uni is currently trading at $9.66, its lowest point since late February. And quoting dude here, Hayden Adams, I am not surprised, just annoyed, disappointed, and ready to fight. Let's go. Uniswap didn't share the exact contents of the Wells notice, but in a blog post regarding the notice, it claimed Uni wasn't a security and it doesn't meet the U.S. legal definitions of securities exchange or broker. The SEC spokesperson shared it doesn't comment on the existence or non-existence of a possible investigation. Consensus Senior Counsel and Regulatory Matter Director Bill Hughes wrote clarifying that the SEC staff have to first get the lawsuit approved by the agency's 5 commissioners, including everyone's least favorite, Gary Gensler. Quoting him here, we all know that the chair wants to sue them, and 2 commissioners are not going to disagree, and 2 will disagree. So a suit is a foregone conclusion, but there isn't a suit yet. He urged those freaked out to take a breath and calm down, as it was extremely doubtful the SEC would target Uni holders or protocol users. Former SEC Internet Enforcement Chief John Reed Stark wrote on X that a Wells notice gives the recipient an opportunity to argue why the commissioners should decline a recommended lawsuit. He said the notice to Uni was not surprising and is always amazed when Wells notice recipients fight back by throwing stones at the SEC with obnoxious, insulting PR campaigns like the one Uniswap seemed to have begun. Quoting him here, any SEC lawyer will agree that responding to a Wells by berating the SEC, calling them names, is a weak, risky, and losing strategy. I just think Crypto folks are sick and tired of the SEC. Now, Stark claimed Uni was recanting a tired, anemic, old, and failed monologue by alleging the SEC is abusing its power and lambasting the SEC's anti-innovative enforcement paradigm. Expect the SEC enforcement staff to lean in and file a robust federal complaint, which will inevitably survive the usual motion to dismiss, prevail against the typical motion for summary judgment, and win on just about every other litigated issue that follows. Now, former General Counsel Gabriel Shapiro wrote that from Delphi Labs, this hunch is the SEC will win on security issues with Uni, but will lose if it claims Uni is a securities exchange. Now, Paul Grewal, chief legal officer of Coinbase, which is being sued by the SEC, agreed with Shapiro and wrote, if the SEC claims Uni is a broker, he believes it won't be able to argue its claim. He pointed to the judge's decision last month in the SEC suit against Coinbase, which determined the SEC failed to allege Coinbase conducted brokerage activity through its decentralized Coinbase wallet. So there you have it, family. How many of you are Uni holders or using the decentralized exchange? Let me know. And how do you feel this will likely play out and impact the greater crypto market? Holla at your boy. Next story of the day, eh? Let's discuss billionaire venture capitalist Tim Draper projects $250,000 biddy this year, 2024, than the latest from Rich Dad Robert Kiyosaki, agreeing with Cathie Wood's 2.3 million projection for the king. So let's break this baby down. Shout out Tim Draper. The renowned venture capitalist Draper sees Bitcoin tripling in value in 2024. Let's do a little triple action, shall we? Due to the inflows into the spot ETFs and looming Bitcoin halving. That's right. Draper reiterated his belief that Bitcoin would drastically increase in value, considering several factors in 2024. Quoting him from recently speaking at Paris Blockchain Week, if I had to predict, maybe we can see 250,000 by the end of the year. I mean, it's looking pretty good, Draper said, and reflected on his previous price prediction for 2022. And to watch the actual interview from Paris Week with Draper making the prediction, check the show notes below the video in the description. But now for the highlights. The approval of the spot Bitcoin ETFs in the US has been a critical driver of renewed interest and capital inflows into the Bitcoin ecosystem. Draper believes the investment products have opened up a new avenue for Bitcoin curious investors that might be daunted by the prospect of holding Bitcoin in self-custody and also serve as a hedge against devaluing fiat currencies. Quoting him here, I think that it gives people an opportunity to buy some Bitcoin and hold on to it so that they can take care of themselves when there is a run on the dollar or the euro. He also highlighted the appeal for investors who want their respective fund managers to continue managing their portfolios. Access to a Bitcoin ETF allows investors to continue working with Fidelity or JP Morgan, boo, and have this new asset class managed as part of their wider investments. So that's right. I mean, Draper's been calling for 250,000 Bitcoin for a while, as we've been covering. Draper said the Bitcoin's finite supply and increasing adoption as a payment option for goods or services could or would increase its appeal to the masses. At the same time, fiat currencies grapple with inflation and decreased purchasing power. That's a nice way to put it. Yeah, the fiat's just grappling with inflation, as if it's in the UFC, right? I don't really need to hold on to any fiat currencies that decreases in value over time because of political whims or government spending or politicians that just decide they're going to spend more money and inflate your money. Well said, Draper. The venture capitalist investor added that Bitcoin remains a place of great security against inflation. Quoting him here, I think I've actually started to see the lines cross. People feel more comfortable with their Bitcoin than they do with their dollars. Man, I felt this way since I got into Bitcoin in 2017. How can you feel any other way, right? The fourth Bitcoin halving is also set to have a significant impact on market dynamics. A quick shout out to Andy Markowitz. I appreciate the super. Thanks for sending your first super ever live and on stream. Respect. The event earmarked for April 20th is one that investors should not underestimate. Quoting him again, if you're an investor in the stock market, they say don't bet against the Fed. If you're a Bitcoin buyer, don't bet against the halving. It changes everything. The supply shrinks, the demand increases, and the numbers go up. That's natural economics, supply and demand. The venture capitalist also reiterated his belief that having single-digit percentage exposure to Bitcoin is becoming a more attractive means of hedging against rising concerns over bank failures and devaluing sovereign currencies. Very well said. Let's not forget. Remember last year, Q1, the Bitcoin market was driven off of the regional banking crisis, and none of that has been fixed. There's still a banking crisis. A lot of people are losing hope, and for their banking institutions, of course. Now, what would happen if that would happen to the masses? There would be a bank run, and they'd all want their money, and the money wouldn't exist, right? And then what happens? Do you receive any money back if you're FDIC insured, but the Fed is poor? Like Michael Saylor says, those who save in fiat currencies are poor. Is that what the Fed is doing? But anyways, I digress. Let me know your thoughts with that, family, and with his $250,000 prediction for this year, 2024. Holla. But anyways, family, now for our feature story of the day. Let's discuss the latest from Rich Dad Robert Kiyosaki uniting with Cathie Wood's 2.3 million Bitcoin price forecast. Let's break this baby down, shall we? And welcome everyone just joining the stream. Greatly appreciate your support. Famous acclaimed author and investor Robert Kiyosaki publicly endorsed Cathie Wood's ARK Invest audacious prediction on Bitcoin, demonstrating a noteworthy agreement of viewpoints towards the potential of the crypto asset to reach unprecedented heights. In fact, let's just read the tweet from Kiyosaki himself. He posted this April 10th, which was yesterday, very late at 11:36 p.m. It already got almost 1 million views, and I retweeted it myself. Actually did it with a quote. But anyways, he wrote, Cathie Wood, I think he means guarantees here, not quaranties, but nonetheless, guarantees Bitcoin will hit 2.3 million per biddy. Do I believe her? Yes, I do. All hail Cathie Wood. In fact, is Cathie spelt with a K or a C? I asked you guys. Let me know. Cathie Wood is very smart. I trust her opinion. Could she be wrong? Yes, she could be. So what? The more important question is, what do you believe? What if Cathie is right? What if Cathie is wrong? And most importantly, how many Bitcoin do you own? That's the most important question, fam. Now, if Cathie is right, I will wish I bought more. If she is wrong, I will be glad to own zero. Most people will own zero regardless if Cathie is right or wrong. School is the only place on earth where smart people are people who never make mistakes. So the real world, the richest and happiest people are people who make mistakes and learn from their mistakes. God bless Cathie Wood for her courage to make mistakes and learn from her mistakes. I too believe the Bitcoin will reach 2.3 million. Now I want to stop there. She's also predicted more recently, I covered on the pod, Bitcoin could go as high as $3.8 million per coin by 2030. Let me know your thoughts on that. So this is more of the modest take here, 2.3 million. He also says, take care. I suggest live dangerously. If you can afford, what is that? 0.1 Bitcoin. Regardless if Cathie is right or wrong, you'll be better educated, smarter, wiser than it comes to Bitcoin. School is the only place on earth where the smart people are people. Now, very interesting there. Let me know your thoughts with some of that, and I'm going to continue with the story. This unity is evidence of the increasing number of people in the financial community who are confident that the asset has the potential to be a game changer with exponential growth. Amen. Now, in February, a report titled Big Ideas 2024, ARK made an intriguing projection that might have a significant effect on the crypto market, especially Bitcoin. The research examines multiple scenarios and projects the possible price movements of Bitcoin depending upon the varying global asset allocation degrees. Specifically, their analysis suggests that investment of more than 19% of the world's assets, valued at a whopping $250 trillion into Bitcoin, may cause it to soar to an all-time high of $2.3 million per coin. Now, it is worth noting that the firm considers that the asset as a trustworthy, risk-off asset that is often viewed as a haven during times of market turbulence. And starting off, Rich Dad highlighted his confidence in the bold prediction and said that this is because he believes the firm's chief executive officer, Cathie Wood, with a C is the proper spelling, just FYI, is incredibly intelligent and her judgment is reliable. And although he noted that Wood's forecast could be wrong, the crucial question here is what people in the community believe. However, amidst speculations about whether she could be right or wrong, the most important perspective to consider is how much Bitcoin an individual holds. Should Cathie Wood's projections prove to be correct, Rich Dad asserts he will regret not acquiring more Bitcoin over time. And on the other hand, if she turns out to be wrong, he'll be happy not to have owned any. Now, that's interesting. We've heard Kiyosaki proclaim he holds 66 Bitcoin, and a few weeks ago, he announced he was going to buy 10 more. So if he did follow through with what he said he was going to do, that would mean he currently holds roughly 76 bitties. Now, even though Wood's claims might be correct or not, Rich Dad underscored ignorance within the crypto space, saying that the majority of the people will still possess 0 Bitcoin. Well, that's a given. Not everyone could own a Bitcoin. School is the only place on earth where the smart people are people who never make the mistakes, he said. And according to Rich Dad, those who make mistakes and grow from them are the wealthiest and happiest persons in the real world. Now, so far, Kiyosaki commended the CEO for possessing the courage to make errors and learn from them, affirming that he also believes that Bitcoin will reach 2.3 million per coin in the future. Now, aside from backing Wood's viewpoints, Kiyosaki is a supporter of the largest crypto asset, which we all know, Bitcoin. Kiyosaki has been constantly advocating Bitcoin, urging the crypto community to invest in the coin rather than in fiat currencies, which usually he labels fake money. That's because fiat currencies are fake money backed by nothing. But anyways, the acclaimed author also made several bullish price targets for Bitcoin this year, projecting the impending halving event expected to take place in 1 week will cause Bitcoin to spike to 100,000 per coin by September. Let me know if you agree with that. Additionally, he claims the Bitcoin might peak at the $300,000 threshold before the end of the year. Can you see a $300,000 Bitcoin taking place this year, family? That's even more bullish than Tim Draper's $250,000 price prediction. Let me know your thoughts. And again, what do you feel regarding him doubling down on Cathie Wood's 2.3 million price prediction? Holla at your boy. I feel very conservative target, very doable. The $1 million question is really, when will it happen? I think Bitcoin's going to hit all the targets that have come before it, right? From 100,000 to 250 to a half a milli to, you know what I mean, 750,000 to 1 million to 2 million to 3.8 million and everything in between. It's just a matter of time. What are your thoughts though, family? Please do let me know. Tim Draper, we've been covering his predictions for quite some time as well. He's been calling for 250,000 Bitcoin. He's an early investor. He got in like 2014. I think there was like a Silk Road auction and he purchased like a vast amount of Bitcoin, very discounted, and his investment clearly has been doing quite well. So you got to respect Tim Draper as well. Clearly they're both bullish. Kiyosaki, he's also bullish on gold and silver. Personally, I don't understand why. If you understand Bitcoin, why are you even still so much bullish on gold and silver, right? But then again, he's been proclaiming his bullishness for gold and silver for decades, right? My first book I've read from Rich Dad was back in the day. I was a young adult. It was called Rich Dad, Poor Dad. How many of you had read that book? Another book I recall reading from him as a young adult was Why We Want You to Be Rich. And that was actually a book he co-wrote with Donald Trump way before he became the president, right? That was an interesting read as well. Some of my other favorite books that helped me think differently, you know, growing up outside of the box in attaining and attracting and manifesting wealth is Rich Dad, I just said that one, is The Science of Getting Rich by, I think it was Wallace Wattles. Correct me if I'm wrong. That was a good book. And also my all-time favorite, what's it called? I don't know why it slipped my mind here. But the one from Napoleon Hill, Think and Grow Rich. I've read Think and Grow Rich numerous times, right? And it's a very interesting read. And Napoleon Hill has another book he wrote later on, before he passed. It was something like Outwitting the Devil or something like that. That's a good classic as well. But anyways, family, let me know if you agree or disagree with some of these predictions. Can you see Bitcoin realistically smashing 100 to 300,000 for this year, 2024? When do you feel the cycle peak will likely be? And for the big question, when do we hit $1 million? When will Bitcoin realistically smash 1 million per BTC? Holla at your boy.